We'll be starting up here in about 2 minutes. Did you get any snow today, Tim?
Just a very light dusting. It's not been bad so far for November 30th.
So those logging in will go in about a minute and start on.
I see my friend, Mr. Thorrington.
I see a whole bunch of people we know.
Yes, a lot of them. I appreciate him being on here, Teresa. Excellent.
Okay, we'll give folks about 30 seconds to finish logging in, Tim, and then we'll start up.
Great.
Okay, we're going to go ahead and get started. Good morning. My name is David Orr. I'm the director here at the New York LTAP Center, the Local Roads program. I want to welcome you to our next in our series of why webinars, fundamental webinars, whatever you want to call them. Today we're going to be talking about budgeting, and our speaker today is actually the Lewis County Highway Superintendent Tim Hunt, but prior to that he was with Casanova. He was with Georgetown, and you were on the town board for a while, were you not?
Yes, I was. I was the town board and town supervisor.
Yeah, and welcome to the dark side.
Yes.
So I'm going to let Tim tell you more about his background, but Tim, you can take it away. We got people watching in the background. Please put your questions in, and the Q&A, we'll go from there.
Great. Thank you, David.
I'm going to go dark.
Great. Thank you. My name is Tim Hunt. I'm, as David mentioned, the Lewis County Highway Superintendent. But I started off my career 30 years ago on the other side of all of this as a town board member, and I worked in the private sector. So I have some experience in the private sector as a town board member, town supervisor, looking at the budget from that perspective, and then coming over to the highway side and looking at the budget from our side of the coin. So a little bit of background there. We're going to try to make this as interactive as possible. There's quite a few people on the line. We're going to be using a tool called Poll EV, and that will allow us to get some responses, and I'll show you how to use that here in just a second. So this is in a series. Snow and ice control has been done. We're doing budget basics now, and please tune in on December 7th for traffic safety and December 14th for the manual for uniform traffic control devices. In the Zoom, you should be able to have this bar right here, and any questions that you have, please type them into the question and answer pod. I'll be monitoring that throughout the process and can answer any questions that you have. So I'd like to welcome everyone here. We're going to be using pollev.com. So if you can go to a web browser or your smartphone and type in pollev.com, and when you get there, it's going to ask you what poll you want to participate in, and then you're going to type in CLRP for New York State LTAP. So you're going to type that into the pollev, and I'll give you a chance to do that right now. And then we're going to see if it's working so we can start to see who's on board with us today. So let's see. I'm going to ask how many people are with towns, cities, state. So 57% of the people on here today are with towns, 25% with cities and villages, a couple state, federal, private, and the weekend. We've got a couple of responses that work for the weekend. So great. I'm glad to see it's working for everyone, and I appreciate it. We're going to start using this throughout the presentation today. So in the theme of why, the question is, why do we care about budgets? As a highway superintendent, why do you care? We want to fix roads, not budgets. We want to get out in the field. And I hear this from a lot of my friends who are highway superintendents who say, I don't like being in the office. I'd rather be out on the road, doing things, fixing things. Why should we care about the budget? It's oftentimes we don't have a lot of say in it. The board or our legislators tell us what money we have available, and we have to figure out how to make it work. So why should we care? The board tells us what the budget is, so why worry about it? I can't control what goes wrong, so why does the budget matter? Those are some of the whys that I hear all the time, and I want to try to answer those today. We're going to have a really high-level discussion about budgeting. We can't get into a lot of detail in an hour, but we want to try to answer some questions about why this is such an important thing that we're going to be talking about. So my job is, and I'm going to ask you to go to pollev, and so we have an engineer, we have highway superintendents, commissioners, DPW commissioners, a couple administrators in with us today. None of the above. So we have some folks from the private sector I noticed on the call today. So we all have a role in the budget. Some of us more important than others. The DPW commissioners have a very important role. The engineers as well that support us. And actually a lot of people in the private sector support our building that budget and making that budget. So depending on what your role is, it's very important. So the primary highway official has a legal obligation to prepare, submit, and manage the department's annual budget. So for a town, that's the town highway superintendent. For the counties, it's the commissioner, DPW commissioner, or the highway superintendent. Villages, the mayor, DPW. But we also have a lot of people who back us up. So here in the county, I have a fiscal manager who helps me manage the budget. In the towns, you may have your budget officer. You're going to have a lot of different support staff, as well as you're going to have people like engineers who help us prepare individual budgets for projects, for our asset management programs. So there's going to be lots of people that help us, but we're going to be primarily responsible for communicating that budget to our legislative body. I'm going to ask if everybody could place a pin on the map of where you're from. I see one from Sullivan County, Schoharie, Genesee. Wow, we've got great representation all over the state. Oh, I love to see that. That's awesome. That's well, St. Lawrence County. We've got people. Excellent. So we've got a great representation all the way down to Rockland. I see there's one down in Rockland and Westchester, all the way up to St. Lawrence County, Chautauqua, Niagara. So we've got the state pretty much covered. And we all have a little bit of nuances, even in the budgeting. There's some slight differences depending on the region that you're in. And obviously some other nuances about how your department communicates. So why do we budget? Rank which is most important. We do this because the law says we have to. We do it because we want to levy taxes to our residents, or we want to communicate with the board. Can you guys go ahead and answer that question? Ooh, everybody says levy taxes. That's the first. Communicate with the board is second, and the law says we have to is second. Well, I would say, honestly, I think communicate with the board and with the public is actually the number one response that I would rank. Absolutely, we have to do it because the law says we do. And we do have to levy taxes every year to make sure that we pay for our activities. But none of those happen unless we communicate clearly and properly with our constituents about what our needs are. And who we communicate depends on the dynamics, the politics of your community. But irregardless, we have to communicate what we need. It's really one of the most important things that we can do. So what are the laws that impact our budgeting? Obviously, general municipal law, town law, highway law. And then in villages, counties, and cities, you want to look at local laws because the charters affect how we budget. We also have New York State finance law and some local laws that we have to take into account when we're doing this. But as the chief budget officer, I'd like to say that you're the chief budget communicator. You're the road advocate. And I know many of you know this, but your job is to advocate for the roads. One of the things that I love about going to Albany every year for Advocacy Day is it's budgeting. It's part of our budgeting process. We're advocating for the needs of our community and the needs of our road system. And whether we're doing it at Albany to our state legislators or we're doing it locally to our local legislators, it's really the same process. We need to communicate with our board, our goals and our targets. And we need to understand from them what their goals are. Do they want a 2% increase in taxes, a status quo, hold the line, just don't change anything? Last year in the pandemic, 4% across the board budget cuts was a message that many of us heard. So when we hear what the goals of our legislative board are, we want to not only be heard what our needs are, but we also want to understand what their priorities are. And a well laid out budget is an effective communication tool. It's a way to bridge the gap on these first two bullet points. We're communicating what we need, they're communicating what their goals are, and through the budget process, we're trying to accommodate both of those. We know that can't always happen. Budgets are a beast of compromise, but hopefully we get something that gets us where we want to go. Communication is a two-way street. A management leader often used to say, seek to understand and then to be understood. Try to understand before you go in. There's no sense demanding large changes if you don't understand what the majority of the board wants to do or where they're headed with the budget. So once you understand that, then you can start to develop your plan and help accommodate that as well. My legislative members do not understand how much money is needed because click all that apply. They are cheap. They don't have the knowledge. They don't listen to me. They are only concerned about keeping taxes down, and they only want to spend what they have to. And I'm glad to see that the two top responses are they don't have the knowledge and they're concerned about keeping taxes down. And I think that's true. I think that's 100% true. When I was elected to the town board many years ago, I felt I had a mandate to control taxes, which was directly the opposite of the highway superintendent, who would come in and advocate very strongly for more money and more things that he needed for the highway department. So it often put us at odds, right? So how do we bridge that gap? And that is through knowledge. So understanding why those needs are and how we can accommodate them is one of the ways that we can do that. So let's talk a little bit about municipal budgeting and municipal accounting. It follows GADSB, which is the Governmental Accounting Standards Board. It's a modified accounting method, fund balance accounting. Now, one of the things that's really important to understand, if you've been in the municipal world a long time, is that is not how private business does its accounting. And oftentimes we're using the same words, but we're speaking a different language. I spent 16 years in the private sector running my own business, and I was very familiar with financial statements and profit and loss statements. And when I came to the municipal world, I was lost because people would talk about budgets, but not in the same way that I talked about budgets in the private sector. Budgets in the municipal sector were used to raise money and to hold a department to spending standard. Budgets in the private sector were used as performance measurements. So they were completely different things, and you went about budgeting completely differently. And oftentimes our board members, our legislators come from the private world. And so you want to be careful when you're talking to them about some of these budgeting issues that you're speaking the same language. And oftentimes that's a little bit hard because they're running a business or they're involved in a business and they're looking at private financial statements. This is fund balance accounting. It's not about trying to make a profit. It's about trying to follow the budget as closely as we can. So how do we go about doing this? How do we start the communication process? And the first thing we have to do is we have to speak a common language. So what GASB did is it created a common language, and it did that through some things called account codes, ledger codes, and object codes. So some of you, or almost all of you, I'm sure, are familiar with account codes: A, B, DA, DB. So general fund A, general fund B, highway DA, highway DB if you're in a town. In a county, it's DO and DM, and in villages, it's A and H. And so when you look at your funds, when you look at your budget over here, you'll see general repairs, personnel services, DA. So that tells me that this is a highway fund DA, and that is our account code. So then they got these numbers, 5110. And what those are all about are their ledger codes. So the account code, the ledger code, 5110 is administration, 5120 is engineering, 5132 is buildings, garages. So when we're looking at the financial statement from one town to another town, they're going to be using the same account and the same ledger so that we can start to compare and benchmark how we do against other folks. So we start to talk about a common language. And then the very last part of that is the object code. So when you look at those numbers, 0.1, so A 5132.1 is personnel services. So 0.2 is equipment and capital expenses. So that's the common language that we all speak in our budgets when we're starting to do our budget. How that is transmitted is through the annual update, or the AUD. So every year at the end of your fiscal year, the municipality has to file what's called an AUD, or your annual financial report. It takes that common language that we've all agreed upon, and it compiles that data into a place where everybody can see it. It's called Open Book New York. It's a really good place to go if you want to start to benchmark your activities or to see how you stack up in your municipality versus another one. So this is what you will come to, is a page like this. And what we want to do is look at revenues and expenditures. We want to compare them. I'm going to compare them right now. So I'm going to hit submit, and it's going to let me pick a county. And so I can pick Chemung County, and I can pick Clinton County, for example, Chemung and Clinton, and I can pick the year 2018, and I can hit submit, and I can look at their budgets side by side to see where their revenue stands, where their expenses stand. And if I dig down into the transportation department, I can see if there are similar expenditure patterns here. Now, obviously, we have to figure out if those two counties are of similar size, or what the scenario is there. But that's the real power of speaking a common language, is now we can start to benchmark our activity and how we perform against other folks. So Open Book New York is the best way to do that. Benchmark, transparency. It allows our constituents, it allows everyone to see exactly what we're doing with our budgets, and it holds us accountable. So let's talk about how that all happens in the real world. So the first question I have is, who creates your vouchers? How does a bill get paid, and who codes it to those common language that we just talked about? So go ahead and just write in an answer if you could. Who creates your vouchers? How do bills get coded? Bookkeeper? Perfect. Let me ask you on that one, the bookkeeper, if they're doing it, how do you know that they're putting it in the code, in the account that you wanted? So you looked at your budget and you saw that you had money in, let's say, paving, and they actually took it out of capital expenditures. So you want to make sure you're communicating very clearly. Now, the interesting thing is you're getting all sorts of different answers, right? Clerk, highway superintendent, financial division, software. We're getting all sorts of different things. What that does is oftentimes it leads to, and I'm sure all of you have experienced that, where you're looking at your budget and you're like, I'm pretty sure I had more money in the budget. I don't understand. And maybe it was a bill got paid and it got coded in a different direction. So you want to be careful about that process right there. And you want to understand it in your municipality and make sure you're communicating very clearly what accounts you want your expenditures to come out of so that you can speak that common language. How do expenditures get coded? Right in the answers, obviously we just did that. What if there's a disagreement about the code? Let's say you want money to be pulled out of one budget and your bookkeeper wants it to be pulled out of another. If there's a disagreement, how does that get resolved? And you can go ahead and type in your answers here, because I'm kind of curious in your municipality if that's ever happened and how you deal with it. The supervisor, the budget officer, do they have the final say? Treasurer, the highway superintendent, the finance director. You can see that lots of people think that they have the final word on where that money gets pulled out of the budget. Never happened, but it's a board decision. It is a board decision, but the board still has to follow guidelines that are put out by New York State. So it is a decision somewhat, but they do still have to follow the law, and they have to know. I mean, obviously, you can't just use money from one tax base and use it on a different tax base, for example. That's illegal and you can't do it. So even though the board may say, yeah, just take it out of here, you can't always do that. So there are some rules that we all have to follow. But yes, at the end of the day, it is a decision that gets done by the town board. So let's talk about the different types of budgets that we're going to encounter, we're going to make and deal with as highway superintendents or highway professionals. So the first type of budget that we're going to be dealing with is the annual budget, which has legal implications. That's the one we're all most familiar with. We create the budget. We usually start somewhere around August, and we start putting together our budget requests, and then it goes into a tentative budget, and it has legal implications. Once that budget's passed, that's how we levy the taxes, we raise the revenue, and then you're expected to follow that budget. There's also an operating budget. That's your daily roadmap. You should have a budget that you are looking at on a daily basis throughout your season so that you know exactly what you're going to be doing. So you have operating budgets which support your annual budget. You also have capital budgets. Those are things for like equipment, road maintenance, things like that. And capital budgets may have a small impact on your annual budget or your operating budget, but they're very large budgets, but usually over a 20-year period, for example. So you want to have some capital budgets as well, supporting your operating budget and your annual budget. And then you are going to have individual budgets based around projects that you're going to do. So say a paving project or something like that. So your fiscal budget calendars, towns and counties run calendar year January 1st to December 31st, villages June 1st to May 31st, and in cities it's January 1st to December 31. And all of that can be found in this document right here. I strongly suggest that everyone have a copy of this document. It can be found at the Comptroller's website, Division of Local Government and School Accountability. It's the Accounting and Reporting Manual. And it goes over all of that common language that we talked about, what account codes we should be using for different expenses, how things should be handled financially. So it's a great guide. It sets out the calendar as well for all of that activity. So it controls the calendars that we have to follow. When budgeting, it is best to pick one. Focus on the fiscal year, do it and forget it, 100%. Plan and budget all year long, or highlight a different aspect of your budget at every meeting. So if everybody wants to weigh in on that, I would appreciate it. Plan and budget all year. Focus on the fiscal calendar. Those seem to be the two. I agree with B, and that's the one that's got the overwhelming response is plan and budget all year long. Absolutely. It's a lot more work if you don't do this year round. If you say, all right, I'm going to wait till August and then start working on my budget, it is going to be really, really hard on you. So if you're planning and budgeting all year long, it just makes things very easy. I also would say highlight a different aspect of your budget at every meeting. I would take your opportunity at board meetings to talk about different aspects throughout the year. When you get into budgeting season, there's a lot going on. And they're not looking just at the highway department. They're looking at the entire budget. So throughout the year, if you can have opportunities to highlight in very small segments, 15 minutes, what are your equipment needs? What is your pavement preservation program? What is your employee strategy? Different aspects of your budget at different meetings throughout the year. That way, when you do get to budgeting, it makes it a lot easier to communicate what you're trying to do. So constantly reinforcing your plan and what you're trying to get done. So the budget cycle varies by municipal type. The rule of thumb is that the preliminary budget for the following year needs to be developed no later than 3 months before the end of the current fiscal year, and it is good to continuously review the budget all year long. Cities are controlled by the language in their charter. So just be mindful of and know your budget cycle, but try to be prepared for it throughout the year. Budget development. While there are many different methods used to develop a budget, the key to have is a thorough understanding of the budget and know what funds are available. As well, you must have a complete inventory of all your assets you're responsible for and the condition they are in to determine your budget needs. So let's talk about some of the budgeting basics here, how you develop your budget. So let's talk about this method. It's called zero-based budgeting. And all expenses must be justified each year, each fiscal year, as if they didn't exist. So let's imagine I come in and I'm a brand new highway superintendent and I have to figure out how much salt I'm going to use. But I have no idea. I don't know what they did last year. I don't know how much salt they used last year. How would I start and justify how much salt I buy? Well, if I'm taking care of 30 lane miles of road and I plow the roads approximately 110 times a year, and you're gonna, how many lane miles you have, you can look at historical weather patterns to try to figure out how many times you're gonna plow the road. 30 lane miles times 110 plow trips is 3,300 lane miles that you're gonna plow. If you're putting your salt down at 200 pounds per lane mile, 3,300 lane miles times 200 pounds per lane mile means I need 660,000 pounds of salt. Divided by 2,000 pounds is 330 tons. 330 tons at $63 per ton. You look up the current bid price and you say, I need $20,790 for the budget. That's an example of zero-based budgeting. What most of us do is we say, well, I had $20,000 last year. I'm going to raise that a little bit in this year's budget. I'd like to use a little more salt, maybe a little less sand, or we just kind of take what we've been given from the year before and we just ask for an increase if we can get it. This is a much better way because it actually justifies and it tells a story. It tells exactly what your application rate is, how often you're plowing the roads. There's a lot of information in here that maybe your board had no idea about. When they're looking at a number of $20,000 for salt, they have no idea why that is. This tells that story. So I love zero-based budgeting because it helps tell the story to people who may not understand exactly what's going on out there. Historical averaging is another method. How much more would you add as a safety factor to cover inclement weather that is unforecast? A great question. And, it's different. I'm up here in the North Country where we get a lot of snow. And it can be higher up here than it might be in Long Island, for example, where the weather patterns are a little bit more mild. But I would be very honest with your board and say, what I just prepared for you with this zero-based budgeting is what I believe is actually going to happen. I'm actually think I'm going to use $20,000, but I think we should budget for $25,000 or $30,000. And I'll come back to you 3/4 of the way through the year and I'll report on where we actually stand. And it's a lot easier conversation to go to your board and say, we're having a really hard winter. We expected to plow 110 times and we actually have plowed 130. Is what we anticipate. So this number is going to be here, and people understand that. And it's a lot easier to justify a budget modification when you're talking about the same thing. So great question. But absolutely, it's one of those things where we have no idea how much snow we're going to get. And we have no idea what the winter is going to be like, right? So a lot of us go, I don't understand how I would make the case or put a number in there because I can't control the weather. No, we can't. But let's tell the story in a way that helps us, everybody understand. Obviously, there's variables. So one of the other ways that we can do this is historical averaging. And I like this way with when you're talking about salt, for example. It's another great way to do it. Is in year 1, we use 270 tons. Year 2, we use 330. Year 3, we use 250. So now you start to see a fluctuation based on a mild winter, a heavier winter, a little bit more mild winter, a heavier winter. So the average is 298 tons. So it could be as high as 330. It could be as low as 250. So the average is 298. I would do both. I would do zero-based budgeting and I would do historical averaging. And I often do that. And by doing that, what you do is it almost always works out with the historical average because your budget is in January. Your winter's already started in November. So you maybe January through April, you use more salt than you anticipated. Well, you can kind of prepare for that when you're doing your next year's budget and catch up. So it's nice having the new fiscal year kind of in the middle of the winter, and it helps you to deal with some of this. So historical averaging is another method. A third method is cost of living, and that is using the expected increase in costs and develop a budget based upon this increase. And I think this is the way most people do their budget. So when you start to talk about salt as an example, if we had $20,000 for salt and the salt price is going from $60 a ton to $65, then in the budget, we would know that that 20,000 is going to buy us 330 tons. So to get the same amount, you need $21,666 just because of the increased price. So that's what we often do. We go, okay, I use 333 tons of salt. Last year it was $60. This year it's going to be 65. So instead of budgeting 20, I'm going to budget 21,666. So that's how most of us do it, is we just look at the increased cost. But the problem with this method is it doesn't explain why you needed 333 tons to begin with. It doesn't talk about the weather pattern. It doesn't talk about any of that. So David mentioned, do you look at the average or maybe the 90th percentile? And that's another way to kind of hedge against those weather events, right? Is instead of looking at the center on the average, look at the 90th percentile and budget for that. Now you're going to take care of 90% of your winter conditions by budgeting in that 90th percentile. So yeah, great suggestion, Dave. Instead of using just a straight average, use the 90th percentile to do that. So cost of living increases. Now we've got our budget and we decide we want to spend our budget. And here's where things start to get a little bit tricky as well. Can we just, January 1st, we get our new budget. Can we just go out and start spending? No, we cannot. Appropriation are a municipality's act of setting aside monies for a specific purpose or for the necessities of its business operations. Appropriations are reduced as you expend money in the given accounts. So I start off the new year, I have a budget, and every time I purchase something, the budget starts to come down. The question is, can I just do that? And the answer is no. All expenditures must be specifically authorized. The budget in and of itself does not authorize you to spend that money. There's a number of different vehicles that are involved in actually getting authorization. For example, if I go to buy a plow truck, I have to have specific authorization to do that, to purchase that. Even though they may have budgeted for the plow truck, I still have to go back for the resolution authorizing me to buy it. So you want to understand that the budget sets aside the money, and then there's legislative processes that allows you to spend it. One of them, and the biggest one in towns, is called the 284 agreement. That's the primary tool for budget communication, and it is an agreement for the expenditure of highway monies pursuant to the provisions of section 284 of the highway law. Anything that's on your 284 agreement that's signed and approved, that is your authorization to spend that money. If it is not on your 284 agreement, you need to go back to your board and get authorization to spend that. So make sure that you understand what the authorization process is. The other piece of that is your procurement policies. And that often talks about what you have to do to expend money. The state procurement policy requires bids for goods and equipment if it's over $20,000, public works contracts greater than $35,000, and construction work greater than $350,000. A bid is required. All municipalities must follow that law. They can be more restrictive though. They can have all sorts of restrictions on your local procurement policy. So make sure you have a copy of your town, county, or city's procurement policy. Local policy equals a statement of trust. If the legislative board has a high level of trust with a highway superintendent, that policy will often be they can purchase anything up to $10,000, for example, without board approval. If they have very little trust, it could say you can purchase anything up to $500 without board approval. So they can really control how you spend that money depending on the level of trust that you have with them. So make sure you know what the local procurement policy is. There are some very severe consequences for not following it. Highway superintendents can be personally liable for expenditures made without approval of the board. So make sure you know what that is. It's another communication tool, and it's an important one. Do your legislative members understand how much money you need? Please pick one of the following. Yes, they do. No, they don't. I have no idea. Wow, pretty evenly split. Oh, it's going the other way now. Yes. So a very small percentage, a third, maybe think their legislators know what they need. 17% don't know, and 50% would say no, they don't understand how much money we actually need. And I would say this right here is an opportunity. It's not, I know it's frustrating as a highway superintendent when your board doesn't know, but it's an opportunity where we can help and educate them on what we do actually need. So I would look at that 46% as an opportunity. All right, planning and asset management. I'm kind of covering a lot of topics very quickly and on a very high level, just to give you a taste of what's involved in all of this, but we'll try to hit as much as we can. Planning and asset management does not need to be complex, but it's a very important part of anything that we're doing with our budget. Is we need to understand what is it we're responsible for, what condition it's in, and what does it cost. Any information that you have will help. So the first thing is get good inventories of the assets that you're responsible for. So I'm going to ask, what are the assets that you're responsible for in your community? Culverts, roads, shoulders, ditches, signs, equipment, employees. It's still going here, so as people are voting. Yep. Okay, great. I would say that they are all very important assets that we have to manage, right? The first one, roads, we automatically think of as part of being our purview as a highway superintendent, is we're here to manage the roads. But the roads are a network of things, right? There's shoulders and ditches and culverts and signs that make up a good road. And then pavement preservation techniques. Do we just pave the road or do we seal it, knowing the right process at the right time to extend the life of our road? So I would treat each one of these assets as a plan, as a long-term plan. You take your roads, inventory them, find out what condition they're in, which ones need paving, which ones could be sealed. Which ones, if we cut the shoulders and did the ditches, did some drainage work, could we extend the life of them? How many culverts do we have? What condition are they in? How many need to be replaced? The same with signs. Employees are an important asset. How many employees do you have? Are they happy? Are they content? Are they well taken care of? What's your pay rate compared to the pay rates of other municipalities around you? Because if you're extremely low, you're going to start losing your employees to other municipalities. So try to understand that asset as well. And the same with equipment. Equipment's a very large component of our highway departments. We need to know what we need, what condition it's in, and when are we going to replace it. So every one of these assets are very important to understand and start to develop a plan for. I would create a plan for each and every asset that you have to manage. So let's talk a little bit about this and when and how we do it. So let's talk a little bit about an equipment plan. It gives us a little bit of a conversation on all of our assets, but this is one that's fairly easy to understand. And what we want to try to do as a manager of these assets is obviously we have to have equipment and employees. Equipment, employees, and materials are what make roads. That's the only things that we have to work with: equipment, employees, and materials. We put the three of them together and we create a road. So if we can keep our equipment cost as low as possible, that gives us more money for employees and materials. If we can manage our employee costs, that helps us to make sure we have the right equipment and the right materials as well. So those are the three pieces that we have to work on. So how do we minimize our equipment costs? How do we keep that to a place where it makes sense? Well, the first thing is understanding what a piece of equipment actually costs you to own. What we generally do is we focus on how much it costs to buy. So for example, if we're buying a plow truck and we're presented with options and one is cheaper than the other, we have to go with that. But we don't look at is what does it cost us to own it? Not purchase it, but to own it. Maybe if we spend a little bit more money up front buying it, it'll cost us less to own it throughout its life cycle. So let's focus on this thing called life cycle costing, NPV. That's the capital cost plus any repair costs that you put into it divided by the lifespan of that vehicle. So that is how we come up with life cycle costs. And that's what we really want to focus on, is not the actual capital cost, but the life cycle cost of that piece. And by the way, this same thing can be used for roads. It can be used for anything that we have. Is it really important, really important how much it costs us to chip seal a road or pave a road? Yeah, it's important, but it's more important to know that that pavement or that chip seal is going to last the expected lifespan that we're budgeting for. So if we buy, for example, dirty stone when we're chip sealing to save money, but that chip seal only lasts 5 years instead of 7 years, was it really a better deal, or would we have been better off getting the better stone? So it's the same exact situation here. You want to understand the entire cost of ownership, not just the purchase price. You want to maximize resale value, minimizing repair costs. And I want to show you just real quickly a graph of how to understand this a little bit more. You take a piece of equipment, and it doesn't matter if it's a pickup truck or a plow truck, any of the pieces that you have, and you want to focus on the lowest potential operating costs. And here's what we know. You're going to purchase this piece of equipment for a certain dollar amount, $280,000 for a plow truck right now, for example. That is a depreciating asset. And over time, over a 10, 12-year period, it becomes less and less valuable. We also know that as the piece of equipment gets older, it starts to cost us more and more money for repairs. When those two lines cross right here, that is where you have your lowest total annual cost for owning and operating that piece of equipment. So when depreciation and repair costs cross, that is exactly when you have your lowest potential cost of ownership. So that's a really important thing to understand. And you want to kind of graph this for every piece of equipment that you have in your shop. And there's lots of ways to do this. And you can also do this, once again, for a road. We know that we pave a road, and over a certain period of time, that road becomes useless and we have to repave it again. And then we come back up here and we repave it again. So that road is a depreciating asset. And just like a piece of equipment, we have to start to do repairs to it, and we have to figure out when it makes sense to repair it and when it makes sense to pave it. So all the kind of conversation that we want to have about every asset that we manage. I want to just quickly show you how I do it with my equipment, and just give you a really simple thumbnail of how we go about actually creating a spreadsheet like that. What I do is I take an inventory of all of the equipment that we have, and I list it. And then I list what it would cost to replace it right now. So in my fleet of heavy equipment, I have 35 total pieces valued at $6.6 million. So I have all of these pieces right here. I have the age. I also have I've kind of condensed the spreadsheet so you can look at it a little better, but I have what condition it's in, how many hours or miles it has on it. But then I list out when I plan on replacing it and how much I plan on spending each year. So I plan on leasing 6 plow trucks, 6 haul trucks. These would be the lease payments. I actually have right here an amortization table for the lease payments, so I can put in how much the truck will cost, the interest rate, and what the lease payment will look like. Then I bring that lease payment over here for a period of 5 years in my case, and then I bring that down and say, okay, this year I've got 6 pieces that are going to be replaced, and I need a total of $243,000 to do that. So it helps me to create a long-term 20-year plan of how much money we're going to need to manage this $6.6 million worth of equipment. Tells a really good story to your legislators, to your board, about exactly what you're up to. Because if you just take a real big picture, $6.6 million, and if it was going to last 10 years, you need $660,000 to manage it. If it's going to last 20 years, you need $330,000. How much of this stuff is going to last 20 years? Not much. So it gives you some ideas real roughly to start to have a conversation of what you have, what you need, and how you're going to control that. So just wanted to kind of show you a real quick thumbnail sketch of how you can go about starting to put together some of these plans. Highway budget cost per mile. Now, the last area I want to touch on is benchmarking, and that is looking at your budget compared to other people's budgets, because we're all underfunded. We know that. We all know we have to work very diligently to be as efficient as possible. But if we're out of whack with our peers, then our own budget, our own legislators are going to start to look at that and question why we're spending so much in those areas. So David down at Cornell has done some great research on that, but you can also get it right through Open Book New York. But I want to kind of just give you some ideas here. Highway budget cost per mile in an urban town is $30,000 per centerline mile. In a suburban town, $24,000. In a rural town, $15,000. What we know here is that the more densely populated you are, the more you're going to spend per mile for your roads. And the range, look how wide the range is. In a rural town, some spend as little as $9,000 a mile, and some spend as many as $18,000 a mile. So it's a pretty big range. And the same thing in a suburban town, and the same thing in an urban town. So the more your population density gets, the higher your cost per lane mile. Counties typically spend about $35,000 per centerline mile of road. Villages typically spend about 27,000 miles, and cities about 31,000. David just texted to remind me that this data is about 5 years old and should be about 10% added to this. So 30,000, add 10% to that, and that'd be 33,000. So gives you an idea of roughly what we're up to. So yeah, these numbers need to be adjusted up about 10%, but gives you a really good benchmark. And I challenge people to go back and look at their own budget and see where they fit in this range, and then compare it to some towns in their own county that are similar size and see where things stand out. So here's kind of that data populated across a map. And this is spending per person as well. So we look at per mile and per person, and that's how you start to see how you have to weight this based on your population. So your highway cost per person in your community, so if you take your total population of the community you serve and then divide it by your budget, what we'll see is about $200 per person in a town, 116 per person in a county, 133 in a village, and 130 in cities, not New York City. So same thing, I would round these up about 10%. They're older data, but really good stuff to start to understand, is my spending in line with where we're at? And yes, this is yearly. This is yearly spending. So you can take your annual budget, use the numbers in your annual budget. So the annual highway budget divided by the number of people in your community, and it should give you a number that looks similar to this. So some really good benchmarking that you probably should be doing, and it helps to make that case to your legislators too, because you might find that you're way under some of your neighbors or under the state average, and that's a conversation to be had. And if your legislators don't want it, that might be a conversation to be had with the residents in your community. If they're not happy with the conditions of the road, they may be finding out that your legislators are not funding the highway department at a standard that is acceptable. So that's all the conversation you want to start to have, is it's all about communicating what you need and where we stand in comparison to everyone else. So and this is also a map of that, color coded. This is percentages of CHIPS dollars. Some places spend 100% of their spending is CHIPS. Some of them are supplemented with town money as well. So it's often good to look at that. It's unfortunate that a lot of highway departments have to only do road work with CHIPS money. There should be some local share, in my opinion, in there, because CHIPS money is capital and has to be a 10-year project. And as we all know, maintenance requires a lot of things that don't last 10 years. So it's just my take on it. And it's hard to do if you're 100% funded with CHIPS money. Communication, and this is kind of the end of my presentation, but when it comes to municipal budgeting, good communication is vital. I know it's hard to do. I know we don't like to do it. And oftentimes we don't like the outcome of it, but we have to stay at it. We are all advocates for our highways. And the more we can educate our legislators, the public, our employees, everyone about what it costs, the more successful we're going to be. I love going to Advocacy Day because it's just another extension of that. It is very important to have good communication with your crew, your board, your fiscal staff, supervisor, mayor, treasurer, bookkeeper, etc. Every one of us. So we want to start to make sure that everyone is in the loop and understands the cost of running a highway department. Learn who you need to include or exclude in conversations and when these should take place. And that is my presentation. As far as the why webinar, real high level overview of budgeting. So hopefully we've answered any questions. If anybody has anything that they'd like to ask, please type it into the question and answer pod. And yes, these slides will be available after the presentation, as well as the video will be available on YouTube. Any more questions? Great, thank you very much. Oh, when does prevailing wage apply to municipal projects? It applies to all municipal projects. Whenever we hire a private contractor, they have to be paying municipal or prevailing wages. So it's very important that we do that. There's currently legislation being discussed right now about even things where we purchase a product like stone, the drivers bringing that stone to us would have to be paid prevailing wage. Currently, we can purchase items without concern of how they get delivered to us, but that may change as well. Right now, that's being discussed. So, but anybody who does any work for the municipality, your paving contractors, any contractor that does work for the municipality, they have to pay prevailing wage. When does prevailing wage apply to municipal projects? I think we just answered that. Can you share a blank Excel template? Yes, absolutely. I have one that is just a general template of what I just showed you as far as the equipment. And if you reach out to me, I have lots of other ones depending on if it's roads or culverts or signs. So I try to create those for every asset that we have. Excellent. All right. Thank you all very much. Have a great day.